Chart patterns. Today we're just going to look at two types. Now obviously there are four selected here because these patterns have an inverse. We have the bullish version of this pattern, and then we have the bearish version of this pattern, and then we have the bullish version of this pattern and the bearish version of this pattern. So we're going to look just at the bullish patterns today, but bear in mind of course these patterns work exactly in the same way in the inverse for the opposite trend. So this is a double bottom, which is a bullish reversal pattern. And this is of course the inverse, a bearish double top. A double bottom pattern occurs when the price action is in a downtrend, but the sellers are losing momentum, potentially because the price action is approaching a long-term support line where there's a lot of buyers. The buyers show up as the momentum of the sellers is waning, and they put in a little bounce. This establishes this potential confirmation line for a reversal pattern. The sellers take control again, but are unable to push the price action below the previous bounce. They're not able to put in a lower low. Buyers again show up here, now with a solid foundation on support. Bulls then need to push the price action above this previous confirmation line and put in a higher high. This then confirms a bullish double bottom has occurred. The same happens in the inverse with a bearish double top. So next up, this is another bullish reversal pattern called an inverted head and shoulder. It obviously has the inverse for the opposite price action. So this is how it works. After a downtrend, the price action makes a low and then rallies to a higher point, forming the left shoulder. The price action then declines to a lower point to the left shoulder and then rallies again, forming the head. And then finally the price action declines again, but not as low as the previous decline of the head, and then rallies one more time. We have this clear confirmation line where if the price action can rise above it, that confirms the reversal. And the same of course happens in the inverse for a bearish reversal pattern. So let's look at the psychology behind these patterns though, as it's really important that you don't just rely on this pattern without any understanding of why it occurs. So you're in a downtrend, and on the left shoulder the overall sentiment is pessimistic with regard to the price action as sellers are still in control. Then a minor rally begins as some traders start to think the token or coin is oversold. However, this rally is short-lived as the dominant sentiment is still bearish. Next, we have the formation of the head. So sellers take control again, push the price action down to another low, a lower low. However, some traders now see this extreme low as an opportunity to enter the market, and the sentiment shifts from extremely pessimistic to cautiously optimistic. This leads then to buyers jumping in, thinking this is a great opportunity to buy because the price is very low, and then they create this rally which brings the price action back to the high of the left shoulder. Sellers take control again following this price rally. The price action declines but does not put in a lower low and puts in a higher low, so more buyers enter the market. Then you have this confirmation line which the price action needs to go above to confirm the move from a downtrend to an uptrend. The important thing to understand here though is this confirmation line. If the price action does not go above this, the head and shoulders pattern is not complete and the price action could roll over. Let's take a look at a couple of examples of this in the real world. So this is Bitcoin daily chart. We were looking at this earlier, and this has a clear example of an inverse head and shoulders which has successfully played out. You can see here the left shoulder, you can see here the head, and you can see here a higher low, the right shoulder, and then the price action breaking above the confirmation line without putting in a lower low, and then of course the price action moves upwards with gusto. Now the key point here is, as a trader, to understand that these patterns are only valid once they have completed. The majority of buyers will show up when the price action breaks above the neckline, which confirms that this was a reversal pattern. If the price action does come down, it creates a left shoulder and then a lower low with a head, and then it puts in a higher low for the right shoulder, but the price action never ascends beyond the neckline and just rolls over. That would be an inverse head and shoulders pattern that has been invalidated. So you need, as a trader, to wait for confirmation that the pattern is complete. Some traders, of course, will come in and buy this support line, which help form the pattern, but they are trying to front run it at significant risk. So let's take a look at an inverse head and shoulders which did not successfully play out. This is Ren, a previous altcoin pick which has yet to play out. When this was first posted, an inverse head and shoulders pattern was in the process of forming. We had the left shoulder, we had the head form, and the right shoulder was in the process of forming with a higher low. However, the price action could not break above the confirmation line and therefore rolled over and put in a lower low. Now currently the price action is trying to break above this level. It has put in a higher high, which is an indicator that there may be a trend change. But until the price action comes above this line, the head and shoulders is invalidated. And arguably it is already invalidated because we've had the price action put in a lower low following the right shoulder. So it's very important to keep your eye on the confirmation line and never enter a trade until it's confirmed that the pattern is successful. And of course, as we looked at Bitcoin, that is what a successful inverse head and shoulders reversal pattern looks like. Where is the best place to buy in this inverted head and shoulders pattern? Is it A or B? The answer is B. Traders who buy A, they may reap the most profit, but they have the most risk, as the price action, as we highlighted with Ren, could essentially just roll over at some point before confirmation of the reversal has taken place. So B is the best place to buy. In the next video, we'll be looking at more chart patterns. Today we looked at 2 reversal patterns, and in the next video we'll be looking at continuation patterns, which are patterns you can use to enter a trade in the middle of an uptrend or a downtrend with confidence. So stay tuned for that. Until then.